Hello traders, welcome to Investoo.com's essential guide to supply and demand. And today we are going to learn how to look for in your charts who is in control, supply or demand. And the reason we need to understand who is in control is because we always want to trade on the side of the trend. Now, this is again the CAD Yen 1 hour chart, and as you can see, I have drawn this level of demand using, the base and the proximal line, and I have drawn the overall um, level using the base and the upper and lower proximal line, because in this case we have both, and in this case we only have the upper proximal line. But what I want to show you guys is this. In this case, we are going to look at this part of price actions from this high to this low. And when the price bounces off of this area of supply, well, we know that supply is actually in control. And we are going to start looking for those absorption zones and those pullbacks to new areas of supply to start shorting this currency pair. Now, the first thing we're going to do is we're going to grab our Fibonacci tool, and we are going to draw. Remember that we don't know that price is going to drop and to this area of demand. We know it because we are looking at past price action. But what we're going to do while we are looking for short opportunities on this, on this supply in control scenario, we are going to grab our Fibonacci tool and go from the high of this level of supply to the low of the level of demand. And we are going to go right here and use these levels. And remember, these levels of retracement are not going to be levels that we trade off of, but levels that will indicate us that we can or cannot jump into a trade. Now we are going to use the 0.75 or the 75%, okay? Retracement, we are going to use the 50, and we are going to use the 30. I'm sorry, 25. Okay, now these are the levels that we need to understand how to use. While price is above the 25 level, everything is good. We can continue to short this market because supply is in control. Like we have right here. The reason why supply is in control is because we reacted to this supply zone and price started dropping. This means that the imbalance between buyers and sellers was won by sellers, which means that supply is in control. So we are going to start looking for those zones to short the market. Now, if price comes below the 25%, this means that we have dropped 75% from the area of supply to the area of demand, and in this case we have dropped 168 pips. Now if price is below the 25%, we are no longer looking for shorts. Why? Because we want to know what reaction we are going to have to this demand. And if price actually goes and breaks above, then we would have a demand in control, right? And when we have a demand in control, we are going to do the same thing. Let's assume that price actually bounced from this area of demand and started making higher lows and higher highs. All right. Now demand is in control, and we are going to be looking to buy this market up until that. I'm sorry, it's upside down. Up until that 25% level. When price breaks with that 25% level, we are no longer going to be looking to buy the market because we are going to want to know what the reaction to that supply is going to be. The demand might absorb all the supply and continue its move to the upside, or the supply can actually overcome the demand and price can actually bounce and continue to the downside. And that is why we are going to be looking very, very hardly to that 25 area for that reaction to the demand from when we are in a down move, or that 25 area and that reaction to the supply when we are in an up move.